Open NFP, everybody. Warriors, how are you? About 5 minutes to the number. Hello, Reef. Just a quick review. The trend line rejected the yen. If you took it, you had a good scalp. There were about 90 pips on the table before the NFP. Also, I said I thought Canada needed to make a new high. It made a few. Still diverging up here. Crude under pressure, getting a little bit of a pop in the metals here. Steve, what are they looking for? About 178 on the number?
Yes, I think consensus is at 185 actually.
Okay, thank you.
4.6% unemployment. That's a consensus.
Yeah, the devil's always in the details. People be looking at wages.
Yes,
you know, that's always a big one
yes,
too.
For inflationary pressures, correct.
Yeah, right. So we'll see. We're about 5 minutes away. Good morning, Jerry and Dan. How are you? The euro got up to that level that few of our FA analysts were looking for, 109.80. We talked 109.80 all week, or for a couple weeks now since the breakaway gap. Starting to look a little heavy to me. Still think the pound wants 130. Steve's getting a lift in his silver position.
Yeah, but
Aussie looks like
no real reversal.
Yeah, you're getting a little pop, huh?
Yeah.
Yeah, good, buddy.
I mean,
I know. You're so detached. You're on
how the week is going to close, and we'll take it from there.
Yeah, you're unemotional.
Yes, you know, trading with low leverage, you know, permits you to think calmly.
And you use zero leverage on that, on the scale limit.
For the time being, yes, but I very rarely exceed 2 to 1 leverage totally in my positions. Totally.
Okay. That's why you're still around, buddy.
As it seems.
When you say that's one of the major reasons why you're still around, because we're all wrong at times, even on scaling. So
yes,
you know, you never get.
It's not that I would have been wiped out if I was using more leverage, but I think my decisions wouldn't have been so good, so I wouldn't be having the same results for sure. Right,
because you'd be more emotional. Exactly. With every tick meaning too much to you. Yeah.
Exactly.
I hear you. Guppy 1 hour broadening wedge up to 146 from Matt.
Oil, by the way, is hanging by a thread at the 45 level, which is the 78.6. I mean, you remember that we had shown a couple of days ago that zone that we said that if we penetrate below that, it's going to be rainfall, and that's exactly what happened. Now it's very important for oil to hold at least the psychological level of 45. It's also, you know, a really strong pivot, because if that level fails as well, things are not looking good, and sooner or later a risk will have to follow lower. Bonds also are testing, at least ZN is testing a support level. So I think the DXY is also hanging by a thread to not break out from the last support line. So I think if we get dollar weakness here, the DXY will have actually broken below a very important level.
Yeah, and you got your dollar weakness you were looking for yesterday. So, and I know that's been your bias. And I think Nick had like a 97.70 target for this move in the Dixie.
Definitely
showed this.
A break below here will extend at least somewhat. I mean, so let's see. I think we're just a few seconds away from the printer.
Yeah, I'm going to watch the end.
As you see from the movement, the liquidity is already very thin at the moment, so people should be careful at least for the first move. Very often it gets retraced immediately.
211. 211 is the number.
211, yeah, it's a bit.
4.4 unemployment, that's strong.
And a drop in of unemployment. I think that more or less this solidifies the market's view that we're getting a rate hike in June, no matter what.
Yeah, agreed.
Okay. So getting a little tail in the end here with this kind of strong number. I think the end could be faded with stops over 113. This could be a failing rally. I'm still looking for lower numbers, at least to here. You know, you have tight stops now over.
Average hourly earnings miss estimates, and last month's were revised down. So this is actually by 0.2%, 2.5 year on year instead of 2.7 expected. So actually, that is the only part of the print that is not hawkish.
The interesting thing is that Dixie is not moving at all. DXY is not moving, which is a bit strange. But then again, you have to think we're pricing a nearly 100% chance of a June hike. So, you know, and another one by year end. So, you know, what's the market going to go and price? Another 3 hikes? You know, it's I don't know. You see, the dollar's not doing anything.
Yes, actually, still
US dollar yen fading may put in a negative candle here. So, you know, that's what I'm focused on. Normally on a strong report like this, the yen should be over 113. So we're getting the fade. I still think we have 1160 to 1050 in it in the coming days or weeks, and I'm wrong on a couple closes over 113. To me, it looks like a little bit more of an attractive short than the Canada at this point, although Canada is diverging up here. I don't have, I got rid of the euro accidentally. Let's see.
You can either click on the top left where it says USD CAD or, yeah, you can switch.
Yeah.
It's really interesting because oil is rallying after the numbers, which I don't get. But, well, yeah, I guess it's...
Oh, euro.
One, but...
So really, you know, the dollar did not like this, even though they're pricing in. You know, I've thought about this. You know, as you go into a tightening cycle, it eventually is going to weaken the economy. I mean, you know, all the recovery we've had in the market has been with the Fed being a backstop and feeding it. So if they're withdrawing liquidity tightening, and then if they do something with their balance sheet, it actually weaken the U.S. economy. So let's see what happens up here. Huh?
Dale, I think you're absolutely right. And we have to think that they put in trillions of QE, and inflation is still, you know, around 2%. Yeah. So are they going to start hiking properly into a, you know, 2% inflation economy, and with GDP not doing, you know, fantastically well? It's a tough one. It's a really tough one. I think you're absolutely right with what you said.
You know, that's you know, they say history doesn't repeat, but it rhymes. They did the same thing in 1937, which drove us into another recession. The Fed started hiking rates prematurely, and then we had another economic swoon that we didn't come out of until World War II. So it's amazing. They have all this history, and if they're going to, and I never thought they were tightening anyway, Stelios, because of inflationary pressures. They were tightening because they had no more ammo left, and they have to bring up the rate so just in case they need it, and they probably will need it, so they could take them back down again.
I totally agree with that, but I also think that, of course, they don't admit it, but they also realize that several, if not the vast majority, of the financial markets are overdone. And they need to put a brake somehow before we get, you know, another huge bubble, and when it bursts, you know, that will benefit nobody actually. So I believe that.
You mean in equities?
No, and not only actually in
bonds.
Bonds.
I mean, they say the bigger bubble, bonds.
Yeah, it's the bubble of everything more or less. If it keeps going like that, yes, of course, there has been a huge improvement in the economy since since the great recession of 2008. But on the other hand,
why do they call it great? It wasn't so great for me. How about you?
I don't think they had that in mind when they used the adjective.
What a great recession to try and survive in. Yeah, okay.
A friend, by the way, is accurately saying that Kiwi is ripping, and he's right. I mean, it's still diverging, but I have to say here that the Kiwi during the past 1, 2, 3, 4 days, during the past 6 days actually, it has tested 4 times the zone of no return, which is around 68, 70. It has dropped below 3 times already. So obviously there is some support here. I mean, some very strong support. But the previous time we rebounded, we got rejected very hardly. So, if you want to be long here with a stop against yesterday's low, it makes sense. But if we close the week below, let's say 0.6850, then there is absolutely no real support level until almost 200 pips lower. So you should be very, very, very careful. Very careful. I mean, the pair is hanging by a thread, literally.
So we're about to get a reversal candle in yen. So I would call this 2 for 2 if you took me seriously yesterday and did something. There were, I don't know, 70 pips at least. So let's see, on a weekly basis, Friday's a good day to say what kind of week has every instrument had. So here's your weekly. Still a positive week. Still above the off number.
Keep in mind that the daily for USD is a doji at the moment, which means that we're actually exactly where we started the day. But on the other hand, if you look at the pound is positive, the euro is about to turn positive as well, despite being lower earlier. Kiwi, as a friend said, is positive. Oz is slightly negative. Risks seems to be more or less.
Don't forget Norway, man.
Yeah.
I like that Nick and Greg are on the same page on Aussie. They're looking for lower levels, so I hope we do get a rally back to about, I think they were looking for maybe 75, 74.5, 75, and Nick's harmonic pattern is down in the 70 handle. So that could set up nicely if it continues to correct. I don't know about trading a counter trend. Would you trade Aussie counter trend? You'd probably have to go with Kiwi, since Aussie Kiwi has been under a lot of pressure. I don't know. They may have even broken the back of this bull count in Aussie Kiwi this week.
I don't think yet. It's not broken.
Not yet. Where would it? Where's the line in the sand in the on FA? So
we don't cover it at the moment, but I can tell you for sure that we're breaking below an important zone. But we have the huge descending trend line. I would say that 1064, 1062, 1064, and as long as we stay above that, there is no technical event actually.
Okay. I want to see what you're seeing right now. I'm giving you the screen, partner.
Yeah, sure.
Everyone knows where my head's at. Give me a Y. It's basically in the end today. Hi, Dan. What's up?
Yeah, here it is. This trend line is actually that makes all the difference. This one. This one. Very bad week for the Aussie Kiwi. We had a warning here. We had a pin bar up here at a new high. That was a very nice reversal. But as long as this line is alive, this was also a major level, but we haven't broken below it yet on a daily level. I mean, we can turn around and close above it, but this was a disastrous week for the pair. But people, somebody should not be affected by what happened on a single week. I mean, from what I see here, the major level of the, of the breakout is still alive. So Would that worry me? Yes, it would. Would that make me run away? Not yet. If I was positioned, not yet. Because when you started obviously being long here, you had a system. You obviously checked this line, so
right.
there's no invalidation yet. Obviously, this.
Yeah, we probably have to close under like 106.
Yes, exactly.
Yeah.
Exactly.
All right. So face members, no interviews scheduled today, but I have a pretty good lineup for next week. In fact, a great lineup. Monday, Anthony Allen, 3X Traders. Tuesday, Chris Bear, Brazil.
Chris,
Wednesday,
by the way,
Alex Bernal.
Chris, sorry to interrupt you, but Chris, I have to say, is an amazing trader. Actually, the guy is a scalper, but he's a scalper with one of the best macro views I've seen. I mean, he's the kind of scalpers that look first at the monthly chart and then take it down and trade on a 15-minute chart, for example.
Yeah, he sent me a monthly on euros looking for a bit higher numbers. And then Thursday, Jamie Satley. Pretty good lineup. Huh? And then every day we have Steve Volge, Blake Morrow, Moses will be back, I believe, next week. And
yes.
Nicola Duke.
He's going to be again with us. He's returning back today in the evening, actually. So on Monday he'll be with us again.
He was up on the mountain getting the 10 Commandments, and he'll be back with the tablets and tell us what they say Monday. I'm referring to Moses Morrow. And, and we have Grega and Nick and Stelios and all of you guys. All of you guys I want to thank. I want to thank everyone that comes here and spends their time with us, and your comments are always welcomed in the question session. Thinking about talking to the team about maybe making one day community share day where we dedicate at least a segment, half an hour, to everything that you're looking at so that you could feel like you're part of it more. So I know you guys do it sometime.
Now that you mention it, Dale, I just want to remind people, let me bring it here so I don't have to change the screen.
Oh, yeah.
I'm looking at. I just want to remind people, we've already received a lot of setups, but you still have a few days until the 11th. This is also, I'm going to put the link in.
Whose setup is that?
That's Blake's. That's Blake's.
They're very nice.
The giveaway. It's the ForexAnalytix giveaway. We need you. We need you to send us our trading setups, and as you see,
who's modeling the T-shirt?
That's Blake, actually.
I bet it's Blake.
Yeah. So our mug, our
get your hands out of your pocket.
Our hat, but the dice is the silver. Buy, hold, sell dices, pure silver.
Oh boy.
Yep.
I want those.
Just send us a picture of your trading setup and the picture with you in it, and the email you'll send it at is here at the bottom of the page we linked. It's giveaway at forexanalytix.com.
And
now, if you win the dice, you can't hang. If you win the dice, you can't hang them from your rear view mirror. You got it on your car. All right, you got to use them. Huh?
I just wanted to say we have to remind people that it's not that the person with the most monitors wins. It doesn't have to do with size or how expensive the setup is. It's other things that are going to be in play, and we're each going to pick one, and then there's going to be a grand prize winner. So.
Then I have a shock because I have one of those ticker tapes under the glass. Huh? So I'm just an old tape reader. So.
Hey, I do 90% of my trading from my laptop, so there you go.
Yeah, me too.
By the way, speaking before of USD CAD, I just want to say something. First of all, for full disclosure, I even tweeted it like a couple of hours ago. I'm short from like 10 pips higher. The last time that we were up 10 days in a row, guess where it was? It was here.
At the highs.
Yes, it was here.
Interesting. You like that. You bring that up too, and you look for market aberrations, like your look on
not always,
NASDAQ.
but it's one of the things I might be doing. Also, don't forget that we have the 127.2 of this extension, and a little bit higher we have the 61.8 of this move lower. So we are currently within. We also have the little overthrow from the channel. So we're currently at a zone that I truly believe will yield at least a decent pullback, And I'm very comfortable.
And are we close to Nick's Gartley pattern in crude that you talked about early in the week? I think it was 45 or 44 and a half. I think if you go to the FA site, and show the harmonic.
Yes, let's actually have a look at it now that you mention it.
So I mean that ties in with it.
Yes, I'll show you immediately. Let me bring it here. There we go.
Wow, Star Trek. Okay.
Let's see
let's
see what Nick has.
Your Cosmos screensaver. There it is.
There we go. Let's see.
Yeah.
Next chart. Server. Oh, there we go.
Yeah.
Yeah, you're right about it actually. We've tagged it as it seems. 44.50.
Yeah,
you're actually right. Yes. She has a 44.50, which was the gap back then. She has an AB equals CD somewhere above 44. So yes, and according to Nick's pattern, we tagged it. You're absolutely right about it.
So that's a great time to top pick Canada, Stevie.
Yes.
If you think about it, the drop in crude has been very severe this week compared to the amount of ground that Canada's gained.
Oh, definitely.
Really, not a lot of ground.
And not only that, if you see today, let me show you before I go to Gregas. If you see USD NOK, for example, which is also correlated, let's have a look at it today. Look at the candle, and look where that candle came from. I mean, you know, sometimes technical analysis is simple because the market builds level. I mean, look at this trend line. I was seeing this potential.
We were talking about that yesterday.
Yes,
that it could be a decent sale from that level.
And look at it. We tagged the 870, 872 horizontal zone, which coincided, confluenced with the ascending wedge, the red line and the blue line here. We also have the parallel channel, so I was looking for both lines as support. And also the 88.6 was at yesterday's high around here, which we didn't penetrate. I mean, we did penetrate, but we never closed above it. So that was a magnificent area for confluence. And look at it. I mean, this is a huge reversal. This is a key reversal, actually. This is an outside key reversal at the moment. 860 support. If we break below 860, things starting to look bad for the bulls. I remind you that this zone has rejected price action several times, not once, not twice, but several times. So being long up there for the same reason that wasn't smart, for the same reason that being long USD CAD up here, in my opinion, is not the best trade you can do.
It even looks more bearish in USD CAD.
Yes, USD NOK definitely turned much harder for the time being. There's no question about it. Sometimes you make the best choice, sometimes not. Other times I've shorted USD NOK. This time I shorted USD CAD. Obviously, having shorted USD NOK would have been a better option. And something else, because we looked at it yesterday. Look at today's candle in USD RUB. At some point we were up almost 1% again today, and look at today's candle.
See it.
You see, this is also a reversal candle here. That's why you're never buying strength, before you see a pullback. I mean, we talked about this setup yesterday, but you're never buying. You either buy when we broke out here, or you wait. So a level that would be interesting to wait for, oops, my mistake.
Yeah, and Armand's shorting pound Aussie up here on the 4-hour third drive to the top. I've known Armand for a while, so
this
probably a good way.
This is a great place to try
What's
again.
this, the ruble?
Yes.
Yeah.
You see?
Yeah, maybe put in a right shoulder. Yeah.
That would be a
Nice.
great area down here, 57, 57 and a half, something like that.
So a lot of the things that are saying that the oil route might be close over in currencies that have close correlated relationships with oil are starting to look better.
GBP Aussie, let's see, a friend talked about it and you just said that. Let's have a look at it.
Yeah, the 4-hour he's calling a 3-driver. Yeah,
Yes,
so you
perhaps,
right here.
but as you see, no signal yet. And as I said, the higher we go before we reverse, for example, we might end up doing, instead of that, we might end up doing this. That's why we have support zones.
Yeah.
So, you know, this is one
Right.
zone, this is another zone, and this is one of
Yeah,
the
he's just talking a scalp. He'd be happy with 300 pips from here.
Yeah, okay.
So, I know how he trades.
Something else, because I've seen people getting chopped up by the crosses several times. I need to reiterate to people, crosses like Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi, etc. They do not move as slow as, let's say, Euro USD, the cable, etc. So, you know, you should be really careful. I mean, you should use less leverage when you're trading those currencies, because those currencies, we've seen it plenty of times in the past, can produce thousands of pips of moves in no time, honestly, no time.
What did you say they should use?
Less leverage.
Oh, I can feel it coming.
Use less leverage when you trade the market. Use wider stops so you don't get picked off. Who's been right the market, wrong the trade a million times? If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage.
Something
Who
else.
loves face? Give me a why. Anyone love face in here? Here's my why. I love working with you guys, so there's mine. Hi, Luca. How are you?
Dale, there is something else people should pay attention to divergences between you know, strongly correlated currencies. For example, our friend is talking about the GBP Aussie. Look at this. This is the GBP Kiwi. First of all, the GBP Kiwi reached the inverted head and shoulders target a little bit lower. So we've now completed this pattern that we had indicated since we broke out. So that's one thing to take into account. Second thing to take into account is that while in the pound Aussie we had a new high, in the pound Kiwi we did not. And that's something, this kind of a divergence is something you should also watch for when you're trying to time a reversal. Okay, because let's be honest, in my personal opinion, those trends have reversed. I mean, after breaking out of this horizontal zone and having the crossover here and above the 200 EMA, that was it. So I'm now looking to buy the dips. I mean, we were looking for the breakout since here, and obviously now looking to buy any decent dips. So if you're trying to short those currencies, in my personal opinion, you're trying to scalp counter trend. But as Dale said before, you can easily get even a 500 pip counter trend move here. We already got
in a couple of days.
Yeah. And if not in a couple of days, definitely within a trading week. There is no question about it.
Yeah.
Yeah, Dan
Everyone
says
doing
that,
okay?
Dan says that he sold it. That was a good trade, actually, the GBP Kiwi on the 4-hour chart.
Yes. Dan's
You also
very good.
see a little bit of a divergence here. Okay, who has something they want to see? By the way, for the time being, the NFPs, to return back to the main subject, is a non-event. At least the USD yen is where it opened the day. We've had some move higher, mostly in a little bit in the pound. Yes, which yesterday found support. When we wrote analysis a couple of days ago, we said, that we had this down day. We said that, okay, we had a strong down day, but as long as this zone holds, there is absolutely nothing to talk about. And as you see, we're about to register fresh highs. The next resistance is here at 131.15. Very likely that we're getting there. I think that it's also very likely that we might even get to 134.45. Anyhow, for the time being, we've had two major breaks for the pound USD, and there is no reason to believe that this move higher is over. At some point, of course, we're going to get a pullback, but for the time being, we're still tilted to the upside. Here is an interesting candle in Aussie USD as well. So we see commodity currencies and commodities are actually turning around.
Recover.
Yes, yeah. We're about to get a hammer after breaking temporarily below the 61.8. Yesterday we tagged it again. So this is going to be a second failure, and that will give the opportunity for a move to retest this zone or this zone before going lower. Now, if you see us to not even make it here, the shallower the pullback, the more bearish the next move you can expect to be.
Concur.
Oil is still down on the day, but much higher than the lows, much higher. This is a bullish candle. It might be still red.
It's early in the day.
Yes. Just look at it. We registered a low $1.50 below where we stand at the moment. I mean, that's a big recovery for the time being. But keep in mind that this is the next major zone if we actually fail. This one. As you see, it goes back, gave us a low here, gave us a low here. It's also the 161.8 of this move. So if we don't actually turn from here, then I can see us going all the way to 42.50 to 43.
The super bears are looking for 35. That was monthly, an important monthly pivot.
That's not going to be easy from a fundamental perspective as well. That's not going to be easy to achieve at all.
Yeah.
Is it possible? Yes, it is. Is it easily achievable? No, it's not.
No.
I think the market showed us very convincingly. The market shows us very convincingly last time that sub 40 oil levels, in the 30s, 35s, it's just not sustainable. At least not the way things are at the moment. Because you saw yesterday with the continuation of the sell-off of oil, straight away you had people from Russia, or I can't remember which producing country. They came out, started talking about potentially extending cuts and stuff. They will come out, they'll jawbone, they'll do whatever they can. So I think below 40 it can get there, but it's definitely not sustainable.
Yeah.
That's my view.
Somebody asked about USD ZAR. I'm just showing it briefly because I know it doesn't interest most people. We found resistance after rebounding. We had an ascending channel. We had a huge parabolic move out of it. And then we've been correcting since. Look at this. You remember, Dale, that I was talking about lows and highs very early in the year being a common theme. Look at it. When did it top? At the 11th of January, actually. So keep in mind, I mean, from experience, I can tell you that this has a huge chance of actually proving to be the high of the year, being in the first few trading days of the year, which is here. But we broke above it. We then made another dipped back. Now we're retesting the 200 DMA. I think that the easy move down is already complete. So for the friend that's asking about the USD ZAR, my personal opinion is I would not be looking at it at the moment because the clean cut moves for the time being are complete. So if I was you, my friendly advice, look for a market that provides you with a better technical setup. I don't see one at the moment.
Does it move with gold?
USD ZAR?
The rand? Yeah. Because I mean, the South Africans are,
Now,
well
I've never
known for
checked
their
exactly
mining.
how high the correlation is. Obviously, they're both USD denominated. So if we correlated it with the inverse of gold, I guess it will have a decent correlation, but I don't think it's...
I mean, what correlates? When you look at what happened here, the dollar's been, steady to weak, and gold and silver got smashed. I don't think many people thought that was going to happen. They probably thought gold would go down if the euro was going to head down towards parity, that the euro would be, 105, not 109.
I remember some time ago, it was like, I don't know if you remember, Stelio, it was like a couple of months ago, I think. It was, 1.5, 2 months ago, there was somebody, a famous trader that was conducting on Twitter a poll, which is going to hit first parity, the euro or the pound. So, the answers were just either the euro or the pound. And I answered him back and I told him, and what if my opinion is neither? Why don't you have, an answer that none of them? And actually, before that happened, I quote retweeted him and said, this usually points to big reversals and we should see dollar weakening. And then he answered back something to me like, half insulted that I was trolling him. And then I explained to him that, listen, I'm not trolling you, but if I honestly don't believe that neither of them is going to hit parity, where do I press? And he said, that's the poll, you just decide and vote on something. And I'm like, yes, but it's neither in my opinion, they're going higher. I mean, sentiment was already overblown. Everybody was thinking Brexit, the British economy is going to self-destruct. French elections are going to be coming in the future. Back then also Merkel's party in Germany was quite low in polls. So they were thinking perhaps some German instability as well, because for Merkel leaving after a long time, we'll bring a new status quo and French elections will be coming and who knows what's going to happen with Greece and Italy in the future, blah, 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 blah. There is a lot of rhetoric, but the point is that the Eurozone, nobody likes it. I mean, everybody loves to hate the Euro, but the Eurozone at the moment is actually doing better. So, things for the US economy have already been priced in that, everything is looking good and, the dollar is strong, etc., etc., etc. But everybody was undermining the ability of the Eurozone to rebound. So from a fundamental perspective, I honestly believe that the path of least resistance is higher. Now, that doesn't mean that we can't...
I think if you were waiting to short the euro, you had a stop hunt, Steve. If you go to your 1 hour chart, I just went to mine, but you go to your 1 hour chart in euro, this last candle took out the previous two highs, glaring divergence, now an inside red candle. May have been the right spot, could be the right spot for that correction. We know Greg is very bearish still, based upon his yield correlation. This could be a place to at least have a piece on, because this last blue candle took out the stops of people top picking it before the NFP. They're gone now.
Immensely respect Gregor's work, and he's a magnificent Elliotician. I also follow Elliott Wave, and I totally see what he sees. He sees this being a fourth wave and one more low coming. Do I believe this can happen? Yes, but I mostly believe that if it happens, it might end up being some last strong bid for the dollar and US equities, etc. So if that happens, I expect it to be mostly a dollar move and not a euro move, at least not for the time being. The only real danger ahead for the euro, and I've said it since, you know, one of our first webinars, I was never afraid of the French elections. The only real danger, which is not imminent yet, is Italy. That's the only component that can actually bring instability to the Eurozone. But that's not something that's going to probably happen in a month or two. Probably it's an issue.
I'm talking about a scalp, you know, some type of scalp in here, that this was classic algos, black box. It's going for the stops above, you know, 109.88.
Very possibly because...
but no follow.
We also have a confluence here of resistances. It was this zone. We have the 50% fib of this move lower, and we also have the 127.2 of this leg, the last leg of the triangle. So this area is definitely resistance. So we can definitely see a move lower. But you remember...
Yeah, maybe back to the triangle. Maybe this might set up a break back into the gap, at least.
Yes, but you remember that we were talking with Nick, and we both agreed that the fact that this gap had not closed for 4 or 5 days,
bullish.
Yes, was totally signaling that the next move is higher.
Yeah, and she said that in the Dixie, and so far you've had that. So you're right. Yeah, could keep going, and it's just a pullback. But anyway, I'm a big believer, from having been on the floor in Chicago, that there are things called stop hunts. Therefore,
sure. There's no question.
Forex stop hunter, you know, and that now instead of it happening in open outcry, it happens with machines. So when I see a market take out double tops, you know, obvious resistance, and then 5 minutes later, it's 20 points underneath where everyone got their buy stops elected, to me that looks like a rinse and wash. So just pointing that out, it just happened in the euro.
Very often it happens on purpose. They do it just to wipe people out. But often in days that we have announcements, etc., because we need to be fair, don't forget that a lot of liquidity is being withdrawn from the market. So you can easily see spike moves because a big order comes through and the market is not as liquid as it usually is.
Mm-hmm.
If I think the recent pound strength could be temporary. Look at my chart. What do you think? Let's see at this French chart. Let's have a look at it. Oh, so this is a long, okay, this is a monthly chart. I just realized because, okay.
So it's some harmonic that may fail from its 130 level and go to 117.
Listen, I have to make the following comment. One of the few types of analysis that I very little know about, I mean, I just know the basic patterns, is harmonics. Now, because we're looking at a monthly chart, I would be a fool not to comment on a fundamental level, because you never look at a 1 month chart and trying to make a scalping comment, obviously. So from a fundamental perspective, do I believe that the pound, after balancing the sentiment that was extremely short and the positioning which was extremely short, if it can move to a fresh high? Yes, I do believe it. How would that happen? If it proves, which we've already seen some signs, if it proves that Brexit is going to be a very tough process that's going to produce a lot more uncertainty for the UK economy, etc., etc., etc. So do I believe that we can get a drive to see a new low? 100% I believe it. Do I believe that currently, today that we're speaking, we're about to turn lower? No, I don't. Because I still believe that the sentiment, despite having this recovery, I still believe that the sentiment is not, and the positioning is not balanced. That's why.
And it has been very bearish for some time now, so for weeks now. So first it has to get to a neutral level, and then maybe if the sentiment goes on the bullish side, then it might be easier. But at the moment, like Steve said, fundamentally there's nothing that is going to make it pull lower and pull decisively lower. Let's put it that way.
I agree with Steve that there's going to be a hard Brexit. It's not going to be easy.
It is likely, yes.
So here's is this Lucas chart, 10-year, or this is yours?
Yes, yes. This is the 10-year. This is the yield, not the bond itself. And this is the zone I was looking as well, Lucas, because as I guess everybody knows, it's inversely correlated. The price of a bond is inversely correlated to its yield.
So we need to get over 240 for yields to start to rise again.
This was one zone I was looking at, which we already penetrated, but we seem to be reversing. But this is also, this low is also, as you indicated, a level of importance. And something, even from an Elliott wave perspective, if you think about it, for the time being, this is just an ABC.
Yeah, the 240. Yeah.
So
and that might be a 4 with a 5 to come, like Greg is saying.
Yeah. So
Greg is looking for the opposite. He's looking for
the opposite. Greg is outright already outright bearish. The bond itself, not the yield. So Greg is bullish the yield. Can he be right? Yes. But do we have already a broken chart that we can say yes? We now have a bottom and we're moving higher. In my opinion, not yet. But seeing how the prints come, etc., it's not unlikely that Greg is right. But we're not there yet. We're not at the point that we'll say, yes, this is it. We know that we have a short-term bottom.
All right. Arif is asking about, does Macron win? I always believe Macron wins out over micro.
But that Macron win is pretty much priced in now. I mean, I don't think anybody thinks or the market.
I think one of the latest polls actually, the gap was being reduced, but now the gap actually has started after the debate. It has started increasing once again.
Yeah, 62.38 the last time. So basically, it's a done deal. At least it looks like.
Statistically speaking, honestly, you remember I said it even before the first round. Not even 1% in my opinion. Not even 1%. I've explained it over and over again, but since not the same people are on the webinar every day, let me reiterate it once more. The French people are socialists on average. There is still a critical majority that would vote for anything else, even a monkey holding a banana, instead of voting for Le Pen.
Yeah, very true.
Yeah, it showed her fishing during the week, and she kept throwing the fish back because she said they didn't come from our waters. They originated in other seas, so she didn't keep the fish.
Yeah,
is that a joke or is that real?
Oh, that's a joke.
Okay.
You know something?
You got me worried there.
But I think she would, don't you?
You know something?
I mean,
unfortunately, we live in an era that kind of a statement would not have been impossible to be true.
You're right.
That's a sad thing.
Yeah.
Yes.
Yeah. Instead, she throw away the fish, put them back, and munch on escargot instead. Only snails. So and frog. The French eat frogs too, don't they? Frog legs.
Oh, I think yes.
Yeah.
But let's be fair with them. They have one of the best cuisines in the planet. I mean.
Yeah. I thought you guys did.
Greek cuisine is also amazing, actually. I'm not saying it to promote the country. Yeah. I mean, I can tell you a lot of negative things for Greece, but that's not going to be one of them.
But yeah, visit Greece. Visit Greece. It's wonderful.
You
know what? It's a dream of mine to visit Greece.
Now you also have people to host you, Dale. So it's
really, I know. That's why I accepted your invitation to join you guys. That was my ulterior motive.
Somebody asked for gold. I don't like the fact that gold has broken below the channel. I definitely don't like the fact that we got rejected once again from the huge multi-year trend line that goes all the way to the highs. It marked that high, it marked this high, it marked that high, that high, that high, that high, and this high for the time being. So the longer term view of the chart remains bearish. But in the shorter term, looking at this, we've broken below the ascending channel, not good. We might hold the 38.2 on a closing basis. We'll see about that.
Isn't that what Greg was saying, that there was still a small possibility that we could hold in here?
Yes.
Otherwise, he had a very negative count.
Yes.
And you know what, Steve? If you have a bullish view of U.S. dollar yen, you can't have a bullish view of gold. Okay, if you have a bearish view of U.S. dollar yen, then you can have a bullish view of gold.
I agree with you.
I know that most.
If you've seen, Gregor has a bullish view in the USD yen, by the way, so that's consistent.
Right, that's what I mean.
Yeah.
Yeah, and so does Nick. And those are two people I don't like to fade.
You know something? I'm on board with them as well. You remember we had gone over the USD yen quite recently.
Yeah.
And if you remember, we actually zoomed out at the chart to have a good look at it, and what we saw was a huge uptrend.
Yeah.
A huge
uptrend. Big flag.
A move lower, which was most probably sufficient in both time and price to justify this to be the end of the correction. Then an impulsive move higher, and what looks as to be a perfect A, B, C, perfect in any way you look at it. Why? Because it's an ABC. It tested the 200 EMA. It held the channel like a champ. Yeah. And look, we even didn't retrace back to this zone, although it's too early to say that. I mean,
we will.
It's likely. But what I see at the moment does not permit. I mean, from the point of view I'm looking at the markets, myself does not allow me to be bearish. I mean, of course you can be bearish as long as we're still holding the channel. But if you asked me, where are we going to be a month from now, and I had to decide now to take a trade today at the moment, I would be long. You see what I did there? I didn't use the gun to my head.
Oh yeah, the gun to your head. But you know that your chart also illustrates what we talked about yesterday about a market penetrating a line but not closing above it. I said I'd like to see a couple closes above the line to get constructive or buy a break. And yesterday we got through the line, probably got some people long. Oh, we're breaking out over this downtrend line, and now they're underwater. So that was a classic example of you really need to wait for a candle to close. I like even two to have confirmation over a channel breakout or failure.
A friend here is sending us Bunch. It's Luca again, actually. Luca, you remember that I've shown my chart several times. I agree with you. There is a high likelihood that what we have here is a head and shoulders formation.
Yeah.
There it is. So,
that's how the euro gets to 115, 117.
Exactly. So I'm with you there. This is a high probability scenario. It's not a complete head and shoulders yet, but this is a high probability scenario. And if you remember, we had said even when we had this retracement here, we had actually written that there was an important resistance level up here, and we got rejected perfectly. If we move, let me go Let me go back to my own chart so we can
I'll
solve.
be back in a couple, guys.
Sure thing, Dale. We had this perfect channel here, perfect channel. 200 DMA, a test of the previous channel support as resistance. The confluence with the 200 DMA and the fresh ascending channel resistance. We had a triple confluence up here, and somebody can add to this little bottom. So a quadruple confluence. So that was a perfect short here, perfect. Now, is it a confirmed head and shoulders yet? No, it's not. Is it a very high probability trade, especially given, that's why I'm zooming out, what has happened before? In my opinion, yes, it is. Somebody is asking for a head and shoulders formation on oil. Actually, I haven't seen that, but which time frame, please? Perhaps you mean like this? I won't be loving it because this is too flat and too prolonged to be ahead. But I don't know if you're talking for a different time frame. Daily. No, this is not a head and shoulders for sure, I can tell you as a fact. I mean, from a theory perspective, this is not a head and shoulders. Can it be a bearish formation? Yes, but the bearishness of this is actually, I mean, two facts were bearish here. Three. One, we had this major 52 area that everybody was looking at it. Everybody was looking at it, and everybody was saying, if we get a break above 52, oil is going to fly. We're going back to 70, back to 80.
You know what, Steve? Let me interrupt you because I made a comment about that and it got me bearish. Look at that breakout. People had 2 months to buy that breakout.
Yeah.
The breakout failed. Mr. Market isn't going to give you 2 months or 8 weeks or 5 weeks or 5 days to say, you know what, crude's breaking out. I didn't buy the breakout. I could even buy it under the breakout 1, 2, 3 times. So don't trust breakouts that give you forever to make up your mind. They're just trying to suck you into it. It's distribution. And that's a classic thing. That's why I'm jaded. If a market gives you the opportunity, like look at the euro. You didn't have a chance to buy the breakaway gap even now. I mean, but that gave you, that's the longest sideways move after a major breakout in the history of markets, in my opinion. Don't you think, buddy?
This was a huge trap. This was a huge trap.
I mean, that's a rookie play that, oh, you know what? Look, crude broke out, but it's still at 52. Wow, I could buy it 8 weeks later and be there for a move to 60.
Yes.
But, you know, I was thinking, Steve, when you're looking at this whole chart.
You know what the second trap was here? Because this was a very tricky market. It had a double trap here. Yeah. One trap is that we had a 5-wave move down. A lot of people thought on a break of this zone, okay, this is it.
Yeah.
We broke above 52. As you very well said, the market proved that there is no significant buying interest to actually make a fresh breakout move manifest. We broke below it in what's an impulsive move. So now I'm going to get short.
And the retracement went further than most people would have thought.
Exactly. You know? And not only that, not only further, because it was...
Further than I thought it would go too.
It's not only that it went further in price, but look at the speed with which it moved back up. Yeah. So people, when we broke...
Well, you know, that's what bear market rallies sometimes, what they are is they're violent and quick.
Yes, exactly. Yeah. So many of the people that were selling down here, somewhere here they gave up. They said, oh shit, the market trapped me. You know what I mean?
Yeah.
Then they saw this trend line because, you know, I mean, they realized that this trend line is significant. They saw a triple bottom here. So they said, okay, that's it, I'm done. I mean, I got trapped by the market. It cleaned off all the weak longs and it trapped me short, and now it should be going on the other side. And then we got a test back of this trend line and boom, That's it. I mean, look at this move. You can't
And
find
Nick
this.
Nick loves to trade this.
Yeah, yeah. Nick gave a very good explanation, actually. She said, I don't remember the name of the guy, but I remembered the rule. She said that oil, she said like 4 out of 5 times, it abides to the rule of, I don't remember the name of the guy. It's a rule that says, that has to do with the trading range. It says the
opening range.
Yes, the opening range, which says the following. You mark down which is the high and the low of the first hour, of the first 60 minutes, and you buy or sell the breakout. If it's higher, you buy. If it's lower, you sell. And said that in the vast majority of the cases, this works very nicely with oil. As it seems, obviously, as you see for the time being, if you did that today, you know, you would have been a lot of, yeah, you would currently be out of the money by a lot, and you would be looking at this candle, which is very scary if you decided to short the black gold today.
How many hours would you guesstimate, Steve, that you spend analyzing charts?
I don't even want to think about it. I don't know.
Come on, man.
I honestly don't know. Don't ask me. I don't want to think about it. You know what I mean? It's
all right.
like
well,
asking
anyway,
Stelios,
you
it's
can
like
tell
asking Stelios, which for some reason has decided to do that, to roughly estimate how many diapers he's changed to his daughters. I don't know why he wanted to actually calculate that. But if I was him, I wouldn't want to think about it.
How many hours for diaper changing, Stelios?
I think I've done 6,000 diapers so far.
Okay, and is that with or without a clothespin on your nose?
You get used to it after some point.
Anyway, my point is, one of the reasons that you're so on top of things is that you spend massive hours drawing your lines, looking at confluence areas, and you know that's what it takes. You know, we're getting ready to wrap it up. It's going to be like a 1-hour session after the NFP, and you know it's been a long week, and everyone knows what we think. But you know, I knew about Blake. Almost everyone's rep preceded them before I joined this team. You know, I knew about Greg. I interviewed him on FX Street. He's an award-winning Elliotician. I knew about Nick. I interviewed her. I knew about Blake. Everyone went to Blake's show, and then some of them showed up for mine. Only had to defend them maybe once. You know, I defend people, but mainly glowing. You know, he's a legend. And I didn't know Stelios, but I didn't know your work, Steve. And I am very impressed with your technical overview of so many different instruments, so many different areas of confluence. So I know I don't spend the same amount of time I do on analysis that I used to, because you know I'm busy trying to book talent for our interviews. And you know, first I go, I'd like to interview on face. Then they go, what's face? And then I email them and I show them what face is, and then they go, well, what are we going to use? And then I have to say, go to meeting and see if they're familiar with it. But you are, you know, one of the best technicians I've ever seen in my 30-year career. And it's not just because you have a great eye, it's also because of your work ethic. And I know all the hours you put into the website. I'm wondering, and I know you have a young family, and I know what it would take to do this type of analysis. I'm wondering, you know, when do you find time to sleep?
I don't sleep much. Stelios is going to tell you.
I can verify he sleeps around 3 or 4 hours a day, and this is not a joke. So the guy is a machine. I call him a machine.
He is. I mean, do you guys agree with me? Steve Volgate is really one of the top technicians out there, and I didn't know it. I only interviewed him once, and you know, I'm kind of an older guy. My memory isn't the best. It's not as good as it used to be, although I do remember everything that people tell me trade-wise. People are amazed that I remember something they said a week ago in the market. So
yeah, actually,
anyway,
I've noticed
Steve,
that, and it's amazing. You hear somebody telling you something, and you say immediately, "Oh, that person last week said that that level is also of importance." And I'm also
Yeah.
wondering, how the hell do you
Yeah.
remember that? You've heard so many things.
That's how I got through college. Yeah, that's how I got through college. Through I have good recall.
Yeah,
Okay, so I didn't spend as much time with the books as I did making sure I was there for the lectures. And through when I hear something, I have pretty good recall.
That's
but you know,
a very important element for the markets as well, remembering price action.
Yeah.
Also.
Yeah. So anyway, Steve, I feel fortunate to get your views every day.
Thank you very much,
really,
a friend asked about copper, if this is a head and shoulders formation. I've looked at it plenty of times, and I've decided that I do not want to treat it as a head and shoulders formation for one reason and one reason only, because the head did not come close or you know, closer. I mean, it's not clean. I don't have a clean right shoulder. Yes, you could say it is, and you could definitely say that in general it is a possible topping formation, because I was looking at this zone. The false break higher is definitely something that should worry people. This triangle is also breaking to the downside, but the major level to watch is also here, the 245. Yeah. So
this could just be a correction off the big rally that we had off the lows.
Yes, it can be.
And you know what? There is a fundamental story coming here. I was talking to a buddy of mine. You know, when you're in the business, I'm going to interview some of these guys, you know, guys that you talk to about the markets for years. Maybe you worked with them. Maybe you shared offices with them. But China is building a behemoth city about 100 miles away from Beijing, where they're going to be moving people out of Beijing to this new city that's going to be bigger than Beijing. They're going to need some copper. Okay, you know, copper is about construction. They are the marginal, at the margins, the swing player. They have been forever since I've been in the business. I know, you know, you would hear, oh, China's selling wheat. Well, they put that out so they could buy it. And if they're going to build a city bigger than Beijing, copper is going to end up being a buying opportunity in my view.
I'm with you. Copper is not broken yet. This is a major level I'm looking at, a major level.
Yeah.
A major level. But one way or another, a break below here constitutes a bearish event. Now,
and you can't have electricity without copper. You cannot have electricity without copper.
You can, but it's the most efficient and cheap way to do it, actually.
And least expensive.
Yes, definitely.
Yeah.
Definitely. So, copper is being used in, by the way, just having another look at USD yen, because we were talking about it. It's mostly unchanged on the day. It has created a little hammer. Euro is flat, but that means that it has recovered a lot of prior losses. Just having a last look so we can wrap it up, as you said. USD CAD.
Yeah, I know you're bullish a pound, but if the pound chart you're showing, is that a daily on your right-hand side?
Yes. By the way, USD CAD, look at this candle currently.
Yeah, you're getting a reversal.
Yeah,
nice shot.
We're about to get a reversal, yes.
But the pound looks like we're approaching a third drive. You see, the first one was that huge candle. Then we had the second one. We should get a new high. I'm going to be very interested to see what RSI is doing at new highs up around the big mountain.
I'm with you. Pound is going to pull back sooner or later. But I don't believe that that's going to be a reversal. I believe that it's going to be a pullback and we're going to have another leg higher, most probably.
Yeah, but, you know, it could be a good trade between 130 and 127.
Definitely.
You know, something like that.
Definitely. Although, as I told you, I don't want to trade it to the short side yet. And when I do, I'd rather, I'd rather aim for a bigger move.
Yeah, another ghost city.
Aussie.
Eric's saying another city. They already have a few ghost cities. But, yeah, they're building another one 100 miles away from Beijing.
Yes, because they want
That'll help the pollution problem.
Exactly.
And the overcrowding problem.
Exactly.
And workers can't afford housing in Beijing anymore.
Yes, and that's a big problem because it increases the costs. Because the interest for workers to work there has dropped significantly because, as you said, their pay is not enough to cover for decent living conditions, and that's a big problem. So that's one of the reasons they want to do that. But you know something, in general, I'm very, very skeptical about the Chinese economy. A lot has been built on debt. I think that it's very likely that the next trigger for a global recession is going to come from China. Now, is that going to be today or tomorrow? More than likely, no, it's not. But do I believe that China is either going to be the trigger or, given whenever the next recession comes, it's going to be in serious trouble? I seriously believe that.
Well, Shanghai has lost 5% in the last month, so you're starting to get those signs. A lot of people are thinking the debt crisis is around the corner.
Yeah, but you know,
forgot the name of the.
Yeah, you know, it's not anything huge yet. By the way, I was speaking about Kiwi before, and I was saying that Kiwi is barely holding, you know, the last line of life, which is this zone. So as you see, we've tried to trap people short plenty of times, but we're still holding above it. But there is, you know, this is a very dangerous area. I mean, if you want to be long, as I said before, with a stop, you know, below the lows, fine. I mean, it's a great risk-reward trade. But if we actually close below here on a weekly basis, you know, kiss Kiwi good night. I mean, we are probably moving
65. Yeah,
66, 70 is the next stop, in my opinion. Nothing before that I actually see as support. So that's it, more or less. I don't know from myself. I think we went through almost everything.
We did. Stelios, anything you want to say before we say goodbye for the week? And
well,
I think we had a great week.
No, I just want to say have a good weekend. Nothing else from me now.
Huge moves. Don't expect any huge moves from a Macron.
The rest of the day.
From a Macron win, I mean, after the weekend, don't expect any huge. You might see, for example, a gap up in the euro, but I think it's mostly priced in. So that gap, if we get a second gap up because of a Macron victory, that gap, if I was a scalper, I would be selling that gap. Because I think that's the gap that's going to be covered.
Great idea. That's a good way. So potential gap higher opening on something that's mainly priced in is a fade according to Steve Volge and the Euro USD.
Yeah.
So I want to thank my team for their hard work and their giving nature of sharing this in our free room here. Encourage everyone to become a subscriber.
Yes.
To support our efforts of having a free room. Go ahead, Steve.
Yeah, I just want to although I don't do sale pitches, but you know, subscription to ForexAnalytix is just $1 for 10-day trial. So they can also get access to all our analysis during the trial and the patterns in play, etc. And you know, we think that it's a great product, and through the mobile app also gives you.
Listen, Steve, I believe in two-way streets, okay? And the one way is that we're coming out here every day, laying it all out for people on the floor. And if they're benefiting from what we're doing here, the minimum they could do is at least check out the trial. But I think that, you know, even a different level, just forget the trial, go right to a subscription so you have these alerts coming to you when the room isn't open. And there are a lot of great trades that happen when the room isn't open, and they're going to be aware of them. Whether they take them or not, no one's ever compelled, but at least they'll know. So with that being said, remember, don't just count your pips, count your blessings. I count working with my team here at ForexAnalytix a great blessing. It's one of the most powerful combinations of talent in the markets I've ever been part of. I want to thank everyone for spending their most precious currency, their time here with us all week long. It's our hope that we're adding value to what you're trying to accomplish as a trader or learning how to trade. And everyone have a great weekend. Don't forget to smell the roses, because it's still spring. So we're going to finish spring strong into the summer solstice, and looking forward to having a great May with everybody. Both Steve and I have birthdays. Mine's the 27th. When's yours, Steve?
12th of June.
Oh, okay, you're on the cusp. Okay. So from two Gemini schizophrenics and Stelios, we all wish you a great weekend.
Have a great weekend, everybody. Thank you, Dave.
Yeah, enjoy. See you next Monday. We're going to kill them again next week.
Bye-bye.
Adios, my trading warrior brothers and sisters. Thank you, Steve, for your hard work. Thank you, Stelios. Thank you, Nick, for dropping in, and Greg and the whole team. And thank you, community, for sharing your views and giving us something else to consider with our risk capital. Adios.